Welcome back to Alpha Recap. I'm so glad you're here. We're wrapping up the day's biggest market moves and what they mean for Monday when markets reopen. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to unpack from today. A real contrast between explosive microcap action and elevated macro policy noise.
Totally. So, let's jump in. The loudest headline was that one tiny stock absolutely exploded, and it wasn't your typical thin volume pump. Can you walk us through that?
Sure. So what really stands out here is that the day's leading penny stock rally saw one name surge by about 154% to roughly $1.07, and it traded about 264 million shares. That's huge volume for a microcap.
Wow, that's not your usual penny stock flash in the pan.
Exactly. I mean, when you step back and look at this, volume is the differentiator. When a microcap spikes on tiny volume, it's often just noise. But a 200+ million share session suggests broader interest, maybe corporate items, financing moves, or structural short squeeze mechanics.
Right. And alongside that leader, we had a cluster of other big percentage winners, some of which barely traded. Give us the quick color on those.
There were several one-day jumps. Another name nearly doubled to about 17 cents, but on very thin volume. Others climbed about 60% to 14 cents on small volumes. Another moved up about 60% to 21 cents, but again with almost no shares changing hands. And one more jumped about 53% to 7 cents on modest volume. Meanwhile, we also saw a penny stock that fell about 32% to roughly 2 cents on modest volume.
So huge percentage moves, but very different liquidity profiles.
Yes, volume tells you whether a move feels structurally different or whether it's classic low liquidity volatility. The big volume spike is more likely to draw continued attention and follow through, but it remains speculative and vulnerable to reversals.
Quick reaction. Scary or opportunity?
Both, honestly. For momentum traders, there were opportunities. For risk managers and conservative investors, these names require strict size limits and stop discipline.
Yeah, that tracks. Let's talk practical trading signals. What did you take away about how to handle these moves?
First, check for corroborating filings and press releases. If the surge is supported by credible news or structural catalysts, it's lower fade risk. If there's nothing, treat it as high fade risk. Second, account for slippage and wide spreads, especially in names trading for pennies. Third, cap position sizes aggressively and set explicit exits. And finally, with a long weekend coming, be mindful of gap risk when markets reopen Monday, March 16th.
Good checklist. Okay, switching gears. Broader markets finished the week lower, right? What drove that?
Yes, markets closed the week down and posted a weekly loss. The briefs pointed to rising inflation worries tied to unrest involving Iran as a major driver of the risk-off tone. Geopolitical stress pushed commodity and oil risk higher, which feeds into headline inflation expectations.
So geopolitics pushed oil and inflation fears. And that hit rate-sensitive sectors?
Exactly. Interest rate-sensitive sectors, banks, utilities, and real estate-related stocks, along with long-duration growth names, were most exposed. When oil and bond yields move quickly, it forces a rapid repricing of risk across those parts of the market.
Hold on. There was also a legal story tied to the Fed, right? A judge blocked subpoenas for the Fed Chair, and the Department of Justice said they'd appeal.
Yes. A federal judge issued an order blocking subpoenas for the Fed Chair, and the Department of Justice announced it will appeal. That means the story is far from settled and could bring recurring headline risk.
How does that legal noise translate into market moves?
If legal uncertainty muffles Fed transparency, traders have less visibility into policymaker intent. That can make markets more reactive to economic data because participants can't lean on internal communications. So you get bigger swings in rate-sensitive assets when surprises show up.
Not great for calm markets.
No. And because the DOJ is appealing, we should expect episodic headlines tied to filings and court rulings. each of which can move financials and broad indices when markets reopen.
Quick check. What should traders watch first thing when markets reopen Monday?
Watch oil prices and Treasury yields first. Those are the fastest channels for Iran-related inflation risk to hit markets. Also scan for any company filings, press releases, or social chatter about the microcap names that spiked. And keep an eye on any appellate filings about the Fed subpoenas.
Got it. Let's tackle the ETF angle. The briefs framed a VGT versus SOX debate. Break that down for listeners who want simple guidance.
Sure. The trade-off is diversification versus concentrated exposure. Vanguard's technology fund gives broader exposure across software, services, and hardware, which generally reduces single industry concentration risk. The semiconductor-focused fund is more concentrated on chip makers powering AI and data centers. Higher upside if AI demand keeps booming, but greater cyclicality tied to CapEx and inventory swings.
So if you worry about macro volatility, lean broad. If you have a high conviction AI call, tolerate concentration.
Exactly. With geopolitical inflation risk and policy noise in the mix, the premium for diversification is higher. But if you're confident in the secular demand for AI hardware and can stomach sharp drawdowns in a chip cycle, concentrated exposure can pay off.
Quick reaction. Interesting trade-off.
Right. And the other thing is to monitor capital expenditure signals from major chip makers and earnings from big tech holdings. Those data points will help decide whether to favor one strategy over the other.
We should do a short rapid-fire check. 2 or 3 quick signals traders should have on their screens Monday.
Oil prices, Treasury yields, and follow-through volume in the headline microcap. Those 3.
Short reactions. Wow, got it. Okay, tactical watch list time. What exactly should people monitor for the microcaps and broader names?
For the leading penny stock that spiked, confirm whether there are SEC filings, corporate announcements, financing notices, or structural items like listing changes or unusual short interest. For the other momentum names, watch whether volume continues or collapses. Expect wide spreads and potential short squeezes. For macro, monitor oil and bond yields. For policy, watch appellate filings on the subpoena matter and any commentary that could reframe Fed transparency. And for allocation decisions, watch earnings and CapEx signals from large tech and chip companies to inform VGT versus SOXX positioning.
So a nice mix of micro due diligence and macro risk checks.
Yes. Liquidity-aware sizing is crucial on the micro side. And on the macro side, keep your exposure to rate-sensitive assets aligned with your drawdown tolerance.
Honestly, I was a bit surprised by the scale of that microcap volume. Didn't expect it.
I know. That one really stood out. Moments like that can create headline loops that attract more retail attention over a weekend, which increases Monday gap risk.
Short reaction. Weekend surprises.
Yep. Weekend and long weekend risk matters a lot. Filings or rumors can change everything before the open on Monday, March 16th.
Let's wrap with takeaways. Give me 3 quick, actionable points listeners can use tonight.
1. Expect volatility and potential gaps when markets reopen. Size microcap positions conservatively and plan exits. 2. Monitor oil prices and Treasury yields first thing. Those 2 will drive much of the macro reaction. 3. Follow appellate filings and corporate disclosures. Both legal headlines and company filings can compound moves started by retail momentum.
Perfect. Final thought?
If you're sitting on concentrated sector bets, especially in semiconductors, reassess whether your conviction matches your tolerance for sharp drawdowns given the current geopolitical and policy noise.
All right, that's our recap. Thanks so much for breaking this down.
My pleasure. Stay careful out there. These are the kinds of sessions that can surprise you in the morning.
Quick housekeeping. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the market opens to follow the follow-through. See you Monday!